All right. All right, fam. This is the midweek review for the week of January the 28th, 2026. We have a couple things to go over. We had the Fed rate decision, which they did not budge on. I think we talked about that before. At first, I hope this hasn't refreshed. Hope it hasn't refreshed, but let's see. Yep, it's already refreshed. I thought I had it stuck on the same screen, but we had a 97% chance that they would keep the rate the same. This is now the next rate decision, which is March 18th. And they're saying that we have an 86.5% chance that they don't change the rate. And again, we probably won't because Fed Chair Powell is leaving office in April. So it may be a chance that we just don't do anything until he gets out because whoever it is that's going to get put into the seat as the Fed chair is probably going to be one of Trump's guys. So we'll have to see how that plays out, and if anything or anybody that is going to like stand up to what Trump's policies are, because essentially the Fed are supposed to act outside of what the government has going on, essentially. But I think that there may be some mixed situations moving forward, right? We like we talked about before, we have Microsoft, Meta, Tesla as the main after hours. We can take a look. That's the first thing I want to do. Want to see how they did in after hours. Here's Before I move forward, notice we got our bounce like we expected, right around 82.41 to 81.97 on this BYD. Uh, I'm not it's not ready to buy. I wish I had seen this earlier throughout the day because I wasn't paying attention to it. But it is bouncing and responding to the area that I want to see it from. So I think that I'll look at this tomorrow. If we get a nice wick into this candle from today, I might be going ahead and loading up on that position, which we talked about on Sunday. The options chain was gonna be the March one. Let me pull it up. I think it was the March one that we were looking at. I think I like the March one. And that March one, remember I was saying that we might be getting something. I want to see the strike price above I want to see 82, around 82 for this to be pushing up. And then we were looking at I think we were looking at the March because that was after the earnings. This is February 5th. I think we were looking at the March. You can do the March or the February contract because the February contract is after earnings. So the February contract is a little cheaper because it's closer. 85 would be a decent strike price. With the ask and the bid on this at 270, which means $270. Remember, we were looking at these and they were around $300, in which I was saying that it's probably going to dip, and that's what happened. They did dip a little bit because I think this was 380, so it's down 10 cents, but we want to try to see if we can get this a little cheaper than that if you take the March contract. I think we might be okay with the February contract. So I'm thinking 85. If we can get 82 in the money, I think we between now and tomorrow, 85, 82, I think we should be okay to take the February contract. So that's what I'm gonna look for BYD, the February contract. I'm gonna screenshot this and I'm gonna just highlight this one. Let's see. So this is the only real option play. To me, I'm not liking options right now just because it's just a lot of uncertainty right now. Like I can't read individual companies at the moment. I'm not liking individual companies at the moment because I think they're in a, I honestly believe the individual companies right now are in such a tough position because they don't have any stability. The country is not stable right now. So companies are actually in what, a hyper saving mode and scaling back mode. And, you know, my company as well, a lot of companies laying off, and, a lot of companies are not doing a lot of hiring. They're not spending a lot of money right now. And because of that, we're not able to really get a clear, concise idea of how to spend money, how to, how to make new acquisitions. Unless you're one of those hyper scaler companies, those big name companies, and even those guys, Amazon just laid off, Pinterest just laid off 15% of their staff. Macy's, my company, laid off 1,000 people, which I was one of the victims of. So, and they closed additional stores that they weren't expecting to close. So, just kind of let you know, the current state is still no real clarity. So, then we got companies like Tesla. See how they did since since we let's see. So after hours, they close at 4:31. They close at 4:31:46. They're up after hours about 2%, almost 2%. We'll see if that follows through on the after hours. Let's take a look at let me look at their options. That'll kind of give us an idea if this is going to keep running or not. So there's a wall at 200. There's a 220
This is
wall at,
the this is BYD.
oh, sorry. Thanks.
Mhm.
Thanks. You always on it. I appreciate that. Okay. 440. There's a huge wall of positions here. The calls outweighing the puts. So 440, which is right here, right where we are. We need to watch that price point 440 tomorrow. If we need to be holding above 440 tomorrow. If we hold above 440, that should give us momentum from Tesla. All right. Let's look at Facebook, get Meta. Calls above 680. Current is the current strike is 668. We need to see holding above 670. And if we can clear 670 and 672, clear out all of that size around there, that we need to kind of clear out this 670 area. Let's see. And that volume could be buying or selling. Oh, okay. Oh, we can see already. Look at the after hours. So they posted positive earnings, likely positive guidance. Let's see. We had positive earnings on this. So this is kind of leading us into the stance that we are going to see this push up tomorrow. So both of the Tesla and Meta are looking like they're going to push up. We actually blew through this 670 wall already. Blew through this 670 wall. And there's a lot of people sitting at 700 that got filled and then we don't have any puts up. So the calls are pushing. So it's a lot of volume to the upside right now. And if we cleared this 711, we probably could see this go at least somewhere around 752. I'll maybe say 730. Definitely should hit that 725 area on the open at some time tomorrow. So two out of the three of the big stocks that reported after hours, Tesla and Meta. Let's check Microsoft real quick. Microsoft. For 481. Oh, they down. They were the only one down. So Microsoft, two out of the three of the major stocks that reported today, they probably had bad guidance, I would assume, because they beat earnings. They beat the revenue, and they beat revenue by a lot, actually. So they beat earnings and revenue, but the guidance is probably what the issue is. So let's see. Let's see what they say. Why is it getting punished? Wait for it come with the expense the resources for a time. Okay. Um, mm, Nothing really to stand out. Just that they aren't, I guess what their guidance, essentially their guidance wasn't great. Um, and they're expecting growth in the Azure cloud computing revenue, but the developers they need to get that done, which they mentioned up here at the top. Is Microsoft telling to be a better? But okay, the main thing is just the company could be growing faster in the cloud if it wanted to, but would come with the expense. So they're not willing to spend the money required to grow faster. That's not very positive a statement, to make as a CFO of a company that's supposed to be innovative. So saying that kind of leads to some concerns, and I'm thinking that that's why we got the response to the downside the way that we did with Microsoft. They are, they're one of the companies that you need to look at when you're considering the AI build out. And because you're saying something like that, they are getting smashed because of that. So market closed at 41.63. Um, they're down almost 6%. Well, they're down over 6%. And I think it's gonna bounce anyway. I don't know if it's gonna bounce immediately because looks like we may want to take this gap, take this low out and trade into this gap right here. So that might be where we're trying to go if we looking at Microsoft. But 2 out of the 3 big companies, I think that should still give us enough momentum for us to see S&P and the rest of the indices push up. So um let's see. All right, so tomorrow and the rest of the week, we got we got we had the Fed fund rate again. They kept it the same. I'll have to go through the notes to see if Powell said anything in particular. I didn't hear anything outlandish so far that came across during the press conference. Then we got unemployment claims on Thursday. Uh, and right now we're expecting 206. Um, but we'll see how that plays out. Then we got PPI on Friday. So we still got some reason for the market to move and still got enough catalyst to see some bigger moves into the week. So Thursday and Friday with the unemployment claims and the PPI, we should at least get some movement going into Friday, Thursday and Friday. So, and then we also have the momentum from getting our Tesla and Microsoft and who are you talking about? Tesla, Microsoft, and Facebook um, earnings reports today. So, and there may be some continuation after the fact from the Fed race release because we didn't see a lot of movement with that release, with it just being the same. So let's go ahead and look at charts now. So based off of Sunday, dollar is really, really just wrecked. You know, we had our move down looking like we would either push down or push up off of this daily fair value gap. And then we also had a trade down into that possibly could happen down into this other fair value gap that was below the low at the time. We gapped down. So that gap down was our 0 to 1. We had consolidation around the weekly open. And then we had our 2-3 move, shorter than I projected, but we still already made our 2-3 to the downside, held that range for a 3-4 retracement, and then we had our 4-5 move to the downside that just obliterated. We took out this low, and we took out this yearly low from this year, and that yearly low, this is last year's low, I think, or the year before. Yeah, this is the low from last year. So we've already taken out previous year low. Let me update that. So that was the previous year low. And now, which I didn't think was going to happen the way that it did, but now we need to bring this weekly fair value gap into play because this now is already dabbled into it already. So I already fell into it once. and this is where we got our current low in on dollar. So, and let's just for giggles, let's look at the weekly real quick so we can see where that's coming from. So, combination of these two fair value gaps just made them one, but that's where this is coming from on the weekly. You can see it right here. We already kind of dipped into this. There's a possibility that this may hold, but dollar is being destroyed right now. And if we do see this come down further, we definitely could be taking out this low from 2022, this weekly low. That's right around 94,692, and that'll give gold the momentum that it needs to go higher. You can also see we got a gap down that even if we were to push up, we got to deal with this gap on dollar. So a lot of this is telling us downside momentum. So that means gold is going to have the room it needs to push up. Shout out to Shanika. I see you on here. What's up, homie? I saw Shanika got into a gold trade today, I think, and you've been trading gold, killing gold. I think it's at 53 right now, which is crazy. So um if you gold traders, you doing good. I already know. Um, but if we look at what's going on, from we already gapped open on dollar to the downside, more downside momentum. This is daily gap right here. This gap to the downside. So the first thing we want to see is how do we get through or manage this gap based off of the close, right? We already started to push down. And what we'll need to be considering at this point is how do we handle this gap? If we trade down below this and stay below this, this at least pushes us to take out this wick or trade into the gap from yesterday. And then we should get our 0 to 1 if we do push down at some point. That first swing should come down at least to try to deal with this liquidity from yesterday's low and this gap right here. If we make this 0 to 1 and we push up, the next thing we'll need to consider is one, there's going to be a fair value gap inside of this move. And if there's not, and it's just a low liquidity run back up, we don't get a fair value gap, then we need to see how we handle this this price gap to the downside. The question we'll need to be asking is if we trade back into this, does it hold? And then does it hold above 96.30, 337? If it can't, we should get a sell-off inside of this gap or around this gap area, plus or minus a couple hundred points, couple points on that. If we can't get above this, we should get a 2-3 to take out the low we make here, and then try to aim for the low that we made at the weekly low. And then that's where I want to see our 2-3 take us down to at least. There should also at that point be a gap in between this 2-3 move, and we should even see some rejection around the high of the weekly into this imbalance right here. So that's where I would expect our 4 to come, our 3-4 to retrace to, if we don't get a reversal at some point. Because at this 2, at the 1-2 and the 3-4, we could likely even see somewhat of a bounce if we get any positive direction on dollar, which I don't think we will. But if we do, that's obviously an area we can see a bounce from. the 2-3 and the 3-4 retracement. If we can't, there's another price point that I need to add onto this field because it's so big. It's a weekly. We need to consider that upper quadrant. We need to consider the upper quadrant, which will give us basically where we made that low. That'll explain to you why we made the low we made, because we bounced around this upper quadrant right here at 95,477. We held at the top of the weekly fair value gap, but this wick pushed almost down to this upper quadrant, right? So I'll actually want to see it trade down to that. And then we can see the 4-5 trade lower to the middle of the fair value gap from the weekly. So the downside moves, of course, I'm not going to add in the bounce that are the bounces that are potentially here at the 4-3-4 move, but just know it could bounce at the 3-4 and the 1-2. The other thing is going to be the move up, right? Move up. Now, if we do, and I'm going to add this in like this, right? Since we already kind of pushing down, I'm going to draw this a little different because I would rather see our 0-1 come from this move that we already pushing to the downside. And then I would like to see if we make a lower high into this after pushing down like we did. If we make a lower high, I would like to see that lower high push up above the price gap. And then I want to see a 1-2 that holds inside of this price gap. Then we can start seeing, hey, if this is going to go up, we need to start seeing that this becomes heavy support. And then we can look to take out, at least get back to the weekly. At least get back to the weekly as a target. I don't think it's going to happen, but I'm putting it on here anyway. Because simply because you never know how this will play out. But right now, all probability is saying that we have downside momentum. We got this is a fair value gap right here. You can see it on the daily. I mean, on the 4-hour, you can see this. It's 2, 1, 2. That's going to keep us from going too far higher. Probably can see it on the daily too. Not so much. I like the 4-hour. So let's put the 4-hour one on. I'm just going to combine these together. There's your 4-hour fair value gap right there. To the downside, we already reacted to the middle. And now this could possibly push us to the lower. And if we do get inside of this fair value gap, then that's also another thing as well. We could also see sell-off inside of this fair value gap. I'll give it the 3-4 sell-off, but also would consider the 1-2 sell-off as well. I'm not going to put that on there because I don't want this to look too crazy. So overall, this is basically the moves I would like to be considering as we go into the rest of the week on dollar. If we ever get back up to these bullish fair value gaps, they've been inverted. So that's going to also lead us to consider those for selling points as well. So that's kind of how I would like for us to kind of consider what happens with dollar. And because of that, that means that gold should continue to push up if we continue down on this path that we're on. So let me send this chart. This is gonna be Shanika said in the chat, silver, the moneymaker. Yeah. Silver the money maker. Silver is finally running and catching up with what gold been doing. Silver been been on a tear. Let me just copy these link. So, all right. So now we understand dollar. Let's look at gold. I don't really have nothing to say about gold. I don't even want to mark this chart up. I ain't gonna even lie. Cause it's just like you just buy it. Like that's been the answer, right? The markup we had on Wednesday, I think by the time got off the call, it had already I think it went to the target that I was gonna try to give on this Wednesday night while we were still on the call. Yeah, it did. At 9 o'clock, we were still on the call on Sunday, and we had already went to the target. So it was nothing we could really do about that. I don't have a setup for gold, honestly. We not getting a lot of retracements. As you can see, this whole move up, you don't see a lot of retracements. You see some consolidation. This is a little retracement, impulse, some consolidation, impulse, a minor swing to the downside, um, but no real retracement into any of the imbalances. Like we didn't even come into this fair value gap. Same thing right here. We impulse to the upside, minor retracement. We dipped into this fair value gap just slightly, and then we just keep pushing higher. No real retracement. And we look at the dollar, look at gold on the daily. This just it's just straight up. No real retracement. Straight up gaps, nothing. We not all of these engulfing candles. We not even trying to come into those. So I all I can say is just if you see it sideways, just buy at right now. And that's kind of the way that it's been trading. You just want to kind of base your risk off of whatever the consolidation is. Like if you were to get in, you probably use the low of this. And then right now we are pushing back up on we're pushing down on dollar, but it's starting to push up. So your range would probably be the high that we made over here and this low for right now until we get something to take out this low. So I don't want to give a setup on gold at all because I don't have any opinion on it. It's just shooting up. And the only thing you can say is just find the range. This is a good for breaking retest. Like if you're a break and retest trader, gold should be that should be your baby right now. Um, because that's how it's trading. It's trading better right now for people that are break and retest strategy people. And if you're a break and retest, all you need to do is box in the consolidation area. And then once you box in the consolidation, trade the breakout of it. If it break out to the upside, you trade in the upside. If you see it trade outside of your range on the downside, look for higher time frame confirmation. Since we just mostly bullish, and then take that trade. So nothing to consider right now on gold. Easy trade is just, hey, this is my high, this is my low for now. If it break out to the upside, I'll take a buy. If it has a clear close on like the 1 hour or 30 minutes below the low, I'll take the sell. but I'm not gonna take the sell as aggressive as I would take the buy. If I'm taking the buy, I'm gonna probably put a little more size on that. If I'm take the sell, I'm gonna take the sell with less size, and I'm gonna only take my targets, immediate targets. I'm not trying to go for no extended moves on gold. So I'm not even gonna send a chart on that one. But um, but this is what I would look for if I was trading gold. Just an easy break and retest setup. Because that's the clearest setup that I think you can get out of that. Now, yeah, Shanika said just waiting on another sideways setup. That's it. I agree. No setups yet. Yep, it's silver. Yeah, I think Wale mentioned copper. I ain't looked at copper too much. Haven't looked at copper too much. Not one that I would look at on a regular, but it's probably worth looking at. Here's our VIX, and VIX, man, it has been the truth, man. Like, if you don't use this right now in your arsenal, this is something I promise you, if you trade the indices, you need to have the VIX paired with it, right? Right now, the inverse correlation between the indices and VIX is it's amazing right now, right? So, I don't know if this is one that you've looked at yet, but again, VIX symbol, VIX, the one you want to find at is the CBOE VIX Volatility Index. Add this to your chart, study this over the weekend, study this, study this, study this. And when you study it, make sure you got um make sure your chart looks like this with your favorite indice next to it, because I will promise you'll see the correlation is spot on. Some notes about the VIX. The VIX opens at 3:15 a.m. and it trades till it pauses at 9:30. And then on the 9:30 open, that's considered the new session. Trades to it trades until I think is 3:30. 3:30. You get your 3:30 Eastern Standard Time. So your VIX candle opens up at 3:15 a.m. You get the new session pause at 9:30, and then at 9:30 until 3:30, you got trading hours, right? Um, so looking at VIX, we had a gap open on the opening to the upside. This correlates to the gap that we got on the indices. All of the indices gapped open to the downside, while VIX gapped open to the upside. The move that we had to the upside starting early into the week was once VIX gapped open, we traded back into this level at 1688, and we failed, and we made a higher low. And while we made a higher low on VIX, we made a higher low. I'm sorry, we made a lower high on VIX, and at the same time, we made a higher low on the indices, right? Let me open this up so we can see this at the same time, right? We'll use we'll go. Let's just go ahead and look at them side by side. This is ES on the left. This is my study chart, so you might see some weird stuff on there. This ES on the left, VIX on the right. So the weekly, right? So this is the weekly. I mean, this is the whole week, right? We gonna hide all the drawings for now. So on the opening Sunday, overnight, we gap down, right? This correlates to the gap that we had on the VIX. Then at the same time, VIX made a lower high, right? ES was making a lower low right here around 3, 4 in the morning. So at the same time we making this low, VIX is making a high, and the high is failing just like the low is failing here. This move down correlates with this move to the upside on the indices, right? Then indices stalls out. We just took a high here. We just traded to a high here. We stalled out, same time. There's an order block. We stalled out around the gap closure. We made a low on VIX. We should be making a high on the indices. We push up slightly, we fail. We go into consolidation. We go sideways over here. We make a small lower high on VIX. We make a small higher low on indices. Same time. This is at the 930 candle on the VIX. This is at the 9 candle on ES. We make the lower high. We take out liquidity. We make a new higher low. At the same time, we're making a high on indices. And now we just pushing up, right? As we're pushing up, we're selling off on indices, right? We're selling off. We don't get a retracement or a low until we can get this high on VIX, which is right around the weekly opening price, when you should expect there should be at least some kind of form of rejection. Whether we trade through it or not, we know that coming to this area is going to give you some type of response, right? This this lower high lines up with this lower low, and then we get a rejection of this. We sell off. That's where this sell off that we're getting during the 2 o'clock rate release happened, and then we push up and push right back down. So right now on the indices, we're seeing that price is pushing down, which means that we are probably going to open up on VIX with a gap to the upside that lines up with the price on the indices pushing to the downside. And then we'll need to kind of monitor how the VIX responds for the rest of the day going into the 9:30 opening. So if we look at VIX, I said all that to bring you back to VIX and where the expectations should be going forward, right? So if VIX volume is low and we start trading down, right? We see liquidity here below the weekly low. We got liquidity here below the daily, these previous day low, these equal lows. So if we do sell off, we are likely going to take the low here and take these lows and then challenge the monthly and the yearly. There is a gap that we've been dealing in. The low should, if we get a retracement from the monthly, yearly, and this previous week low, we get some kind of retracement, we should see price push back up around the 1586 area. If we do, that should lead us into a 2-3 move to the downside, right? Because we should have a fair value gap in here or a gap somewhere in here. Then we should push down, trade through. So that's where we should get at. And if we do have this happen, this should push the indices to the upside if we see this downside move happen. Also, if we get down near this monthly, yearly opening price, we also should see a bounce around here. This is another thing that can happen where we could possibly see a reversal down here by this yearly and monthly. And then if we do continue lower, we got previous year low right here at what is this price? Previous year low is right at 13.38, and another one is close at 12.70. So if we do push down and we start closing up below these levels, the monthly and the yearly price, this is where we could probably go. Now, if we get upside volume, which I think we're going to gap open, if we get the response that I think we're going to get, then that leads us to, we already traded through and pretty much balance out the new week opening gap. But if that's the case, then I think our 0 to 1 takes us above these two highs. And then we trade back into right around this 1790 area. And then if we get a retracement at all and we push down for a 1-2 move to the downside, I think we hold up around this weekly, get above this weekly, and then we can start challenging this gap. There's an order block, there's a fair value gap inside of here, but 1790 around this area, plus or minus some points, should be where we see price try to respond from. And if we are going to get higher, we probably aim for to try to take out this high if we were to push up higher. We could also see price reject around this 1790, this 3-4 move to the downside. So that's the other move. So I don't even want I don't want to leave the rejection on here, but the main thing I'm thinking, actually, I'll leave the rejection. We don't need this one because we know that if it get down here, it could bounce. This is the one that I'm eyeing right here because if we do push up and on VIX and we make it around this 1790 area, this order block is gonna and fair value gap that's sitting right here is gonna challenge something, like even if it's just a minor retracement. And that's kind of in line to us having a late response to the Fed rate release because we didn't get a lot of momentum out of this. But if we do want to see that we have VIX pushing up, we may get a sell-off on indices, but then that leads us to getting a bounce at some point if we get around that 1790 area. So that's kind of what I'm thinking will be the how it'll play out. The other thing that, and I'll send the VIX chart real quick. The other thing that took place today is the indices are S&P made a new all-time high. I thought that Dow would do it first. Dow is stalling near its all-time high, which we can go into now. Here's VIX right here. I thought Dow was going to make the high first because it was so close. Going into Sunday and Monday, we were off the high, pretty close to making the all-time high here and here, and we failed, right? So I thought we would go ahead and make the high at some point this week, but we didn't. We actually Dow's been pretty weak. The weakest of the three. We not only did we not make the high, but we end up retracing back into this range that we've been in, and we're basically at the halfway point. When we just left premium, and now we pretty much in discount on Dow, right? So we traded through the gap, we held on the gap, we pushed up, right? 0 to 1 is complete. We had and just like I mentioned before, sometimes the 1-2 or the 3-4 is going to be our move to the downside. In this case, our 1-2 was the move to the downside. So this, and I mentioned this too when we talked Sunday, but we could probably get a move to the downside here, or I said we can also get it at the 3-4. So we end up getting it at the 1-2. This happened 5 a.m. main portion of the sell off, so couldn't even really talk about this one. Even this move up here happened like late in the day, so you know this would have had to be a closing trade, and this would have had to be a London trade or pre-market trade. And then Wednesday we just printed up and down all day, so that kind of that's kind of the week we've been having on Dow. So looking at where we closed last, we kind of still where we were on Dow, right? We got our close on Dow here, which is basically inside of the weekly opening gap. And we still have the liquidity here. We have the wick here, and then we have this fair value gap. We got this order block. So same setup basically on the downside. If we come out of this range, this area of liquidity, this area of liquidity, and we could potentially hold inside of this fair value gap, right? Worst case scenario, we push down to the low of the fair value gap. If we stay bearish, right, and we get a 1-2 retracement, the 1-2 should happen inside of this move down and possibly even up to this new week opening gap. But let's just say move to the downside. And then I like this little area right here, the order block that got that pushed us down. If we do invert it and we trade below it, that could be the trigger for us to go lower. So I'm guessing our 1-2 should be around here. If we do get the 1-2 and set up for a 3-4 move to the downside, first target should be the low we just made here, this weekly low, and then we should at least try to bounce off of the monthly and the yearly opening. Then if we do continue, if we get a bounce, which we should, right around the monthly or the yearly, that 3-4 move should trade to this inverted fair value gap. And then that's where we should get our 3-4 high. And if we do get that and we want to continue lower, we got our 4-5 taking us to the monthly low. Right. So that's the downside catalyst setup. From the upside point of view, it's similar, just similar to what we already kind of seeing, right? This is a fair value gap. We can see it on the 4-hour, right? And because it's a fair value gap to the downside, we know already that our 0-1 needs to come into here. And if this is going to stay and continue, it needs to invert that trade through and above this. So if our 0-1 does do that, then our 1-2 retracement should stay inside of this inverted fair value gap. And then it should fail that fair value gap. And we can get rid of you. We don't need you no more. This is our upside imbalance now. And the high is 320. So on the upside, right? If we're gonna see some equal highs, so we can just make these relative equal highs right here. So from an upside perspective, from where we close, right? If we see price push up, this is going to be the first area where we can see lower high, right? And once we get in here, if this stays bullish, if this stays bearish, we can see the 1 to 2 being a sell-off. So that's where this sell-off would come from, right here. Or if we continue to push up, that means we hold inside of this fair value gaps, and now we invert this. And once we invert that, we know that this should be our 2, and then this should hold and push us above the high we just made, and then above these highs, and we should get our 3 high, at least somewhere around and above these highs that we just made. And then if we get a retracement, our 3-4 should come back down to challenge our old bearish fair value gap, and now this will be bullish. That will give us the move to take out the all-time high. And we also can consider the 3-4 as, if it doesn't want to hold, we could get the sell-off from there. So I would rather see a sell-off from the 1-2 in this case. I wouldn't really want to see us sell off from the 3-4. If we get the 3-4, I want to see us holding this 4-hour fair value gap and actually looking for buys above this inverted fair value gap if we got above it, if it gets inverted. And then I would like to see that be the catalyst to get us to the all-time highs. Since since ES has just taken out all-time highs, I would like for the rest of them to follow, and this would be the catalyst. This would be how I would expect for price to move if we were to go ahead and take out this all-time high. We would have to move in something similar to this in order for us to get that high taken out. We would need to trade back above this new week fair value, new week opening. Then we would need to come into this bearish fair value gap, because this is our bearish point of interest. And then we would need to balance price inside of this fair value gap. And then even if it sell-offs, we would need to see price holding somewhere, probably inside of this, and or if it sold off, come back into this area and then use this area to push higher. So that's what I would be looking for on this. That makes sense?
Yep.
Make sense? Okay.
Yep.
Let me give you this. This is Dow. It's Dow. Oh, dang, I ain't see Shanika. Shanika said she had to jump off. Got mom duties. Totally understand. Then NASDAQ. NASDAQ looking the same or similar. NASDAQ, there was a daily fair value gap that we probably needed to come into. We had on the weekly opening, new week opening gap, we did our 0-1 down to where we expected it to be, which was right around the monthly, yearly opening, and even into this fair value gap in this order block right here. We pushed down, and just like I said before, sometimes when we get our 0-1, our 1-2 could be the move back to the upside, right? That's kind of what we got right here. So we got our 0-1, immediately pushed down. We had our 1-2, but our 1-2 continued to push higher. So that's what that'll look like, right? And then now, from the time we get back above this new week opening gap, now we using this new week opening gap as support. And we start closing back above this and holding above this and then pushing up off of this, right? When we make this move, that's our 0 to 1. We take out this high. Our 1-2 is this swing right here. We didn't get we didn't get as big a swing, but this is that same 1-2. Then this move sets up the 2-3 move to the upside. We get that 2-3 move. We get a slight retracement. We get our 3-4 move. That's this little swing down right here. Then we get our 4-5 move to take us through all the targets, which the main target was at least to come into the gap, but primarily take out the previous month high, right? We got into the gap and then we just stalled out, went sideways. So we pushed up a little higher than the gap. And now we just kind of ranging into that. So this liquidity is still going to be a potential. If we were to push down to the downside, right? The close was a little higher. The close was here. The first area of liquidity is below this low. So I would definitely want to see that if we are going to trade low, we need to take out this low. There's a little order block that maybe keeps us up. And then there's another one right here. This is a fair value gap. Probably can see it more chop on there. Yeah, this is probably the only fair value gap that I would look at in this leg since we already trade through this. So this is the main thing I would look for us to come to on the downside. And then that's kind of where we would like to see. If we trade to the downside from here, we come and bounce off of this. And then that's when we get our 1-2. We could see price bounce at our 1-2 because we are mostly bullish on indices right now. But if we can't, we get a 2-3 to the downside. We fail that. This other fair value gap is where I think we trade to. So that's where our 2-3 takes us. And if we do continue lower, we just inverted this fair value gap. And this would be the move to give us a 4-5 to at least come back down to the new week opening gap. So that's how I would be looking at trading this for the rest of this week on NASDAQ. You can see we also got a 1 hour for fair value gap down here too. I'm not going to draw it, but just know it's right there. Then as far as the upside goes, if we want to go ahead and start to aim and take out that high, right? We need to get back above these candles, right? So really, I know we started already for the day, but I'm going to just use this last candle we at right now. We would need for price to push back up above. So our 0 to 1 would need to really kind of happen where we are right now. And then that would be the move to lead us from down here where we are inside of this fair value gap that we traded in right now. And then this low of the fair value gap around 26,143 needs to hold. And then that's where we want to see our 0 to 1. And that 0 to 1 should take us above this high from yesterday. This is the weekly high right now. We need to see this high get taken out. right? And then if we get above that high, this candle is going to be an order block. And that's going to be likely where we get support. So if we do push up and above this, our 0 to 1 should take this high out. Our 1-2 should trade down into that candle. At least the middle should be the hold. So we should get a 1-2 retracement into this candle. That should be our first stop. And if we hold that and we get a 2-3, that should take out the highs we made at 1. And then there's likely something in above that. Gotta go far. These relatively equal highs at 26.5 and 26.550. Basically, all three of these little short-term highs. And then let's see what's over here. What else is over here? That's pretty much it. These highs. There's a fair value gap right here. It's been traded into twice. There's a little small fair value gap. That one's not worth mentioning. What's on the 4-hour over here? It's an order block. What about the daily? What's over here on the daily? Nothing of, Wicks. We all know that Wicks is just smaller time frame stuff. So yeah, let's say if we get the 2-3, it should come to 26.50 area, 26.550 area. And we should probably hold above or around this previous high right here. And then if we haven't, the 4-5 should take us above this high. If we haven't done it already. And if we take that high, I'm looking at if we take that high, looking at least that 26.850 area to 26.900 area as a target. To the upside. But same way as before. The 1-2 or the 3-4, we could see retracements at those. We could see rejection at those areas. The 1-2 or the 3-4. So I'm just gonna put this at 3-4 for now, and just know that this could also be a 1-2 rejection as well. So if we got up here and we couldn't clear this high out easily, we could also see the 1-2 sell off as well. So if we were to get up there, could also see it from there. That makes sense, right?
Yeah.
Okay. Then this is the liquidity we need to be targeting if we get downside. I actually like seeing liquidity right above a fair value gap, because if we do sell off, they'll probably sweep this, hold inside, and then try to bounce. So again, look for the bounce at the 1-2 or the 3-4 for the rest of the week. This is NASDAQ. I hope this makes sense.
Yep.
Yeah, it makes sense, Corey.
Mm-hmm.
Cool. And then finally, here is ES. ES got me today, man. I'm not even gonna lie. And the reason
It almost got me today too. I didn't get in.
yeah, man, it was doing some janky stuff. And then the brokers were jacked up today too, man. Had some issues with the Apex Tradeovate platform. So I only I was a little hesitant to get back in, but I was able to close out with like $230 in profit um in each one of my accounts. But I'm cleaning up a little mess that I made Friday anyway. So um still up like 15K in the two main 300 accounts. I need to make up for the loss I took on Friday, which was 1,500. So yeah, I'm coming out of a hole going into this week from Friday. For the month so far, I'm down 1,300. I'm up on the week 230. So that's kind of how the week been going. I haven't really gotten a clean setup that I like. Um, so I'll be cleaning that up the rest of the week going into next week. So um we had the gap to the downside, just like we mentioned before. We had liquidity below these lows. The gap swept all that liquidity into the order block, into the fair value gap. We held the monthly and yearly opening price. Our 0-1 was basically projected as expected. This also gave us simultaneously our 1-2 retracement. The 1-2 retracement ended up being the actual reversal. And again, this is the perfect example of sometimes these moves, the 1-0-1 or the 2-3 can be a reversal setup, right? And then now you can look at the upside move. Your 1-2 to the upside traded above and took out all of these highs right here. Then we traded into the new week opening gap, right? We had a new day opening gap on Sunday. This was a gap from last week, right? And then this was the gap from this week, right? We traded back into the gap, right? Then once we traded back into the gap from last week, you can see this candle right here is an order block right at the low. This candle was used to kind of push us above this high and this high and this high, right? And then basically this move started right at the low of this new week opening gap right at 69.41, and we pushed through it, right? We got a 1-2 right here once we made these highs right here. The 1-2 basically came above these highs into this little structure, and then we held near the high of the gap from last week. This gave us the move for our 2-3 to the upside, right? So our 1-2 took us back to the high. Our 2-3 held near the high, and now our 2-3 pushes us near the all-time high. Once we get the 2-3, right, near the all-time high, we stall out, right? We stall out, right? And we actually take the high, right? This is pretty much our 3-4. This is pretty much our 3-4 right here. This move down right here. Because our 2-3 went ahead and took out the high. This 3-4 basically plus or minus a couple points took the high, and then we retraced back right around where we projected the 3-4 would take us to, right? So now if we're gonna push up higher, this 4-5 move needs to happen, right? We don't need to consider it no more. Let's go ahead and look at it from some new eyes, right? So now let's just look at the daily. So on the daily, you can see we got a fair value gap. You can see that same fair value gap on the 4-hour. And you can also see it on the 1 hour as well. So probability says we come back into this area if we do push down lower. I like it on the 4 hour the cleanest. And we've already inverted this gap, so we can take that off the chart for now. I like it on the 4 hour the cleanest, but it is on the daily as well, and they pretty much lining up in the same area. So we're just gonna use the 4 hour. So there's our 4 hour fair value gap, right? The other thing I like is I like seeing liquidity above fair value gaps, because usually they're gonna sweep this, trade into the fair value gap, and get a bounce, right? That's exactly what happened on the opening. This is exactly what happened, right? We had liquidity build up above a fair value gap, which is right here. They swept all of this liquidity with this move to the downside, traded into the gap and into this order block, and we ran up price after that. You see it another place right here. Build up of liquidity. We sweep below it, take out the low, trade into this fair value gap, even though it's slightly right here, only made the high, and then we push up. See it right here. Liquidity, 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 liquidity. We push up, we trade down below. This is a fair value gap on the higher time frame. If we look at the 1 hour, 4 hour, this probably look a little different, but just for GP, right? That's that same area. This is the same low. The low taps into this fair value gap right here. Probably look a little different on the daily, but same thing. This is that same low right here. We took out liquidity up here, here, and there's a gap and a fair value gap overlapping right here. Same situation right here. Liquidity, liquidity, fair value gap are low, and we bounce. So I'm looking for this same situation if we are going to be pushing down. Take liquidity. Let me do it like I did it the first time. We take liquidity on the 0 to 1. I should have did this like this on the rest of them. We take liquidity on the 0 to 1. And then, yeah, our 0 to 1 may give us our move to the upside. I should have did this on the other one, other indices, instead of just saying it. And then if we get a 0 to 1 that takes us into this fair value gap, our 1-2 may be a bounce that we need, because we would have taken liquidity and traded into this bullish fair value gap. So that could trigger us to go ahead and take out this high. If we don't, a 2-3 to the downside likely puts us at back inside of the new week opening gap. This is still a relevant move, right? Our 2-3 takes us into this gap, and we could also see the bounce happen from there. Since again, we're a little bullish on it, even though there is a catalyst to the downside. If we are not able to push up, we know that this would have been inverted. This should be the first area we look to sell from. This should be the area where we would make a lower high. And if we do, and we sell off, our 4-5 move should take us below this low. Well, first, the low we made here, below this low, and then possibly below this low. And, of course, if we get back down here near the monthly, that'll be what we look at too. But if we do trade in this, because we are bullish and they are buying the dip, this is where you would probably see it happen from, right? Yeah, let me do it like I did it. I'd rather see 0 to 1 happen somewhere around here, or if we're gonna just hold inside of where we are. I like where we are too, because we could just push from there. So I kind of like where we are. So I'm gonna use this opening candle, the close of the opening candle for the day. So if we do get a 0 to 1, and that 0 to 1 holds around where we are, which I see it as being a possibility because of the after hour news, us holding around here and pushing up from here means that we take out this high and this high, and we trade at least near the all-time high, and we get our 0 to 1 possibly around this 70-50 area. The 70-50 area is about right here, right? This candle becomes an order block. So if we do get a retracement, if we do get a retracement, that retracement should hold at or inside of that candle and these candles right here because they overlapping. That should give us our 2-3 move to take out the high we made here, push us above. And now we looking at probably set, since this is all-time highs, we probably looking at anywhere between 70, 75 up to 70, 90 area. You know what we say about the 90s? For some reason, ES likes the 90s price point. And then if we get a retracement, for a 3 retracement, a 3-4 retracement, we should get it above or at the all-time high. So that should give us a swing. And then best case, we push above to 7100 area, plus or minus. If we do get up here, of course, we can see a rejection at 1-2, a sell-off at 3-4, but I would probably not look to sell around these areas. Not aggressively. So only on the lower time frames. And then I'm taking money. I'm see money, take money on that. So this is it for all of the indices. This is S&P. We went over VIX. We went over dollar. I'll just open it up for Q&A. If anybody got any questions.
So you are in the search chart, right? So look at Monday 26th at 9 a.m. FVG. Exactly.
Monday,
This
20.
one. Yeah, this one. Yeah, yeah, this one.
Yeah.
Right. So below that, that is 9 a.m. and this one is 8 a.m. and this is 9 a.m. Right. So like both FVG is breaking previous highs, right? So is it okay to consider all in one?
Yeah. Because it is. If you seeing two,
Mm-hmm.
like these two back to back, right? You wouldn't
Right.
just draw this one and then draw this one.
Yeah.
That's why I went to the 4 hour
Uh-huh.
instead, because if you go to the 4 hour, that same set of candles is just one candle.
Yeah, but for like entry purpose, when we refine this one, so which one
Mhm.
is a preference? Like upper one or lower one?
For me,
Yeah.
a preference.
Uh,
I usually want to see where's the inverted fair value gap.
Yeah.
The one that overlaps the inverted fair value gap. So it will probably be the smaller one.
Oh, yeah.
But if I'm looking at the smaller one, you can also consider this gap to the downside, just
Yeah,
like the
previous
inverted
one.
fair
Yeah.
value gap too.
Yeah, yeah, exactly.
So
Yeah, I thought about that same. Could I include that gap as well?
yeah.
Okay.
Hmm.
So like as ICT says always like if in this kind of case, right? Upper one is there, but you can consider that for wick, lower one, right?
Hmm.
Uh, so means right now what means sometime I'm getting not I'm not very clear about this. So I am just what I am doing, like I am making a whole section just 50%, and whatever is the 50% below that 50%, wherever is like my FVG, I'm considering that. Is it good idea?
I mean, I go with whichever one has the overlap.
Okay.
That's my easy answer. And
Mhm.
it won't be accurate all the time,
Right, right.
but just as a rule of thumb, who
Hmm.
has the inverted fair value gap inside of it?
Okay.
Where's the most overlap? That's usually my question.
Hmm.
And if I got overlap, right, even in this case, right, if
Hmm.
we go to the looking at this low right here, right?
Hmm.
Okay, there's a fair value gap here.
Hmm.
There's a fair value gap here.
Yeah.
The one that's got the inverted fair value gap is the lower one,
Yeah,
right?
but in this case, like I am clear because this FVG broke that previous high also. So consideration is means good one. Like this is IFVG, then FVG, break of structure. Then again, it is coming. This is best entry, right?
Yeah.
Mm-hmm.
But at the same time, the one that's got the overlap,
Overlap. Yeah. Okay.
even regardless, the one that's got the overlap, so this one
Mm-hmm.
inverted, this the inverted fair value gap, right?
Right.
Inside of the order block.
Mm-hmm.
And then the fair value gap is right here,
Yeah.
right?
Mm-hmm.
The overlap is happening between the middle of this and the high of this.
Mm-hmm.
You probably more than likely out of 10, 9 times out of 10, it's coming back inside of at least inside of this area right here. If you want to be super precise,
Right.
that's where you get in your best case. I'm a genius. I'm the best person in trader in the world entry right here.
Mm-hmm.
But at the same time, that's because you're looking at this time frame. If you're
Yeah.
probably looking at like, well, let's go to the 30-minute, right? You could even extend this fair value gap because there's no overlap. So there's a little small fair value gap right there. That makes this even better because now your entry is overlapping here. So that brings the entry up a little bit.
Right. Right.
So it's kind of how you see it, right?
Mm-hmm. Mm-hmm.
It's kind of how you read it, how you reading it, right? And sometimes you might have to pull the trigger a little early. And
Yeah.
you might have to jump in a little early, but you
Mm-hmm.
just need to understand, like, all right, I might have to jump in a little early,
Mm-hmm.
which means my stop loss got to be a little bigger. But the main thing is, am I in the right direction? Because
Mm-hmm.
if you're in the right direction and you get that same entry, it don't matter where you are because you about to go for a gold.
Yeah, yeah. Like same thing happened today. Like I saw that sale
Yeah.
and MAS one, and that valid reason it was there also, and I saw entry and I did that, but I put my stop loss like on FVGC, so immediately I got out. but
Yeah.
after that it made that move. I did maybe I don't know why did I put, but yeah, I was my main bias was bullish, right? So, but I saw that and I thought, okay, I can take this sale.
Yeah.
Yeah.
Mine was too. Like I was initially bullish too.
Mm-hmm.
And the reason being is because we had just taken the high
Mm-hmm.
and we had already kind of I'll go over my trade from the day too. Uh
Mm-hmm.
we had taken this high
Mm-hmm.
and at 39 and 43, right?
Yeah.
And then when you look at the VIX, we were stalling at this high and we gapped down on the open.
Mm-hmm.
So the way I was looking at it was the gap down was about to push up. So I did get in for the buy
Mm-hmm.
around 70.23
Mm-hmm.
and I took it to 70.31
Right.
and I
Me
probably
too.
should have closed it at that point
Yeah.
because I after the gap got traded through
Mm-hmm.
um on VIX,
Mm-hmm.
specifically this candle right here, this 945 candle specifically,
Mm-hmm.
that took out these highs. And then seeing this candle followed by this 950 candle, the
Mm-hmm.
950 candle was the last candle that would have given me a stance. If it didn't close back below this candle or below this gap, that's the signal that this is over with.
Yeah.
And instead, we pushed up higher, right?
Mm-hmm. Mm-hmm.
That's where you took your sale from, I think. And that was around this area over here. But by that time, the broker was already jacked up. So I'm just glad I didn't, you know, I should have took the money up when I was up 10 points. I broke even a little bit initially. And then I end up taking a piece of the sale
Mm-hmm.
down here. Um, after my broker came back up. So I just kind of made up the little losses I took on this. And then I just left it alone after that because at this point VIX was already extended over here
Mm-hmm.
and we really was not responding to it much
Yeah.
because we were just probably waiting on FOMC at that point.
Right, right. So like I didn't had a big L because I took only one, so it was okay.
Mhm.
But second one, like why I made that at break even when it broke first structure. So
Yeah,
I was at B, but yeah, after that I means I was busy, so I thought not to touch anything.
yeah, yeah,
Yeah, but I think that was good decision also because it
yeah,
was not like in direction, and it was good idea to keep.
yeah, yeah. And then you can see at two when the rate release,
Mm-hmm.
same kind of candle, opposite direction.
Yeah,
Doji, bearish doji, bullish doji, but we sell off.
yeah.
Bearish doji, but we push up.
Mm-hmm.
Then after the news, we get a low on VIX around 1510.
Mm-hmm.
We get a high on Dow, I mean on the indices at 770.15 and we
Mm-hmm.
sell off again. While we selling off, VIX is pushing up. We get a low, should be something over here. We sweep the liquidity here.
Yeah,
We get a low. We come same time we getting this low, we getting a lower high on VIX at
right.
the weekly.
Mm-hmm.
And then we sell off after we get this and we push up on indices.
Right.
And that's how we close, right?
Mm-hmm.
But we open, we closed on the VIX, so we don't know how this is responding during these hours. So when we get the 315 open, because we push down, I'm gonna assume that we get a gap open on VIX, right?
Yeah. Mm-hmm.
We should get a gap to the upside on VIX. And the way we want to look at this
But
tomorrow,
but lower than this high, right?
we don't know. We don't know. Probably so. Probably so. Yeah.
Because yeah, okay.
But just the way this look right now,
Yeah.
the gap should probably be below this high.
Mm-hmm.
Right?
Mm-hmm.
Later trees, um, the gap should probably be below this high. And let me go to this other chart. Let me see what the VIX look like on the one that I got marked up. So if we gap to the upside and we stay below that, uh, I thought I was gonna see if we had a level somewhere. Maybe 1671. And that's because that's the middle of the new week opening gap that we had. That's the quarter point in between the middle and the high. I'll show you. $16.71. That's why I said that.
Mm-hmm.
So,
Below that order block.
yep,
Mm-hmm.
below this order block too, right at the order block, around the order block. So if we gap up, it'll probably be around here on VIX. And then we'll need to pay attention how we trade within that gap when we get in on the open and how we move throughout. So that's what I'll be looking for on
Mm-hmm.
on it.
Mm-hmm.
But
Got it.
yeah, I hope that makes sense.
Yeah, yeah, sure. Mhm.
But yeah, man, I like I kind of got a little ahead of myself on this morning,
Mm-hmm.
seeing this gap open right here.
Mm-hmm.
What's been the case is when we get the gap to the downside
Mm-hmm.
and it needs to stay open
Mm-hmm.
and we need to leave the gap or we need to trade into the gap and then fail.
Mm-hmm.
Uh, this is let me see if I got it. Any other examples?
Oh, yeah,
So
I got you. Like to move this up, right? Opposite one. Means a VIX move, if it will move in downside, like as you said, then MES can go up, right?
yeah, yep, yep.
Mm-hmm. Mm-hmm.
So this was Tuesday. In this case, on Tuesday, it looks like we had liquidity
Mm-hmm.
above this high, and at the same time, right,
Mm-hmm.
we had liquidity below these lows right here. Then when we open, right,
Yeah.
925 to 930, we pushed up above this. So this isn't a gap, but let me find one that gap because that'll be a better one, right? So this is Monday, right? Yeah, Monday is better, right? So we had our durable goods, we had our news. This one gap on the open, this 925, this the 930. This gap, we should have traded back into it. We didn't. We left it open. And this is something that I'm looking out for now because on new days when we got news,
Mm-hmm.
it's a high probability we won't fill in these gaps. We don't need to.
Okay.
So,
Mm-hmm.
and then at the same time, this is gapping. This is just pushing up on ES at the same time with no retracement into this made a gap and a fair value gap. This made a fair value gap to the upside, and then nothing never came back into it either.
Mm-hmm.
Although it did come back into it on ES, it did come into it on NQ. On this particular day, NQ was the better trade because at that same time frame, NQ on Monday, um, at the same point, right? On Monday, right? This is this is it over here. Okay, so NQ took this little move right here, this little small move right here, right?
Mm-hmm.
It made a higher low right here. And then there's a fair value gap right here on the 15-minute. And then use that and trade it back into that. Let me find it again.
9:20, right? 9:35.
This is the 14th. I'm going in the wrong direction. Triple. 26. Okay. All right. Here it is right here.
Yeah.
This the fair value gap
Mm-hmm.
on 8:45. This is this swing right here going into the fair value gap and buying on the open. So
Yeah.
yeah,
Okay. Mm-hmm.
yeah. But all right, I will go ahead and call it a night. I think we got all the questions,
Mm-hmm.
a couple people on, and then I will get the video posted. I'll post all the trades. And then I just hope you guys have a good rest of the week. I'm
Mm-hmm.
be looking
Thank you.
to try to at least, do 1,000 between the next couple days and
Mm-hmm.
get back up for the week.
Yeah.
All right. Later,
Thank you
Anna.
so much. Yeah. Good night.
All right, Wale. See y'all Sunday.